Another 3 months has passed us by, and while the overall crypto market valuation may not have done much, there were many notable developments that occurred from April till June this year. As usual, we've covered all of the most important ones in our Q2 crypto industry report, and in this video, we'll give you a quick rundown of the report. Starting off with the total crypto market cap, in Q2 we saw a decline of 14%, though it had largely been crabbing since it made its yearly high in mid-March. So far, total crypto market cap has still been unable to break past the prior cycle's ATH of 3 trillion. The most notable move within the top 30 cryptos would be by ton, which climbed from number 15 to number 8, breaking into the top 10. The dominance of Bitcoin, Ethereum, and USDT saw an uptick this quarter. For Bitcoin, this is the second quarter in a row where its dominance has been climbing. Meanwhile, the largest loser this quarter would be for others, whose dominance saw a drop of 4.1%. For Bitcoin and USDT, their increase in dominance could signal a flight to safety within the crypto markets. Meanwhile, Ethereum's dominance spike coincided with rumors about the imminent approval of US spot ETH ETFs starting to circulate. After a prolonged rally starting from Q4 last year up till Q1 of this year, the top cryptos across different sectors finally saw some pullback. NOT is probably the one worth mentioning here, the token for the dApp that started off as a clicker game that went viral. It climbed by 95% this quarter. It benefited from the rise in the ton ecosystem, which among other things saw a wave of attention from the tap to earn narrative, which was itself led by Notcoin.
Just sit in a meeting and do this. When you're sitting on the toilet, do this.
Out of all the 19 tokens observed, only ETH, BNB, Leo, BGB, and NOT outperformed Bitcoin. Okay, moving on to stablecoins. This is one sector which saw green this quarter. Despite the decline in the overall crypto market cap, the top 15 stablecoins grew by 7% or 10 billion in absolute terms. This growth was driven by Tether and Ethereum's USDE, and the latter saw a growth of over 2 billion in market cap, a 134% increase. There was a significant drop in correlation between crypto and the S&P 500 this quarter, from a high correlation of 0.84 last quarter to only a weak positive correlation of 0.16 in Q2. We can see that this drop in correlation could largely be attributed to the divergence of the crypto markets and the S&P 500 starting in June. The S&P 500 continued climbing to all-time highs while the crypto markets saw a decline. Now, it's almost hard to believe, but Q2 was loaded with airdrops, with at least 21 notable ones being launched. However, the flip side to this is that many of these hyped projects launch with a low percentage of their circulating supply, but with sky-high valuations in the billions. For instance, Starknet launched with an FDV, or fully diluted valuation, of a whopping 19.5 billion, with only 7.2% of its token supply circulating at launch. As a result, many of these tokens' prices plummeted soon after their airdrops, especially with the bullish sentiment of the market cooling off in Q2. This video is brought to you by BingX, a leading crypto exchange with over 10 million users worldwide. BingX offers spot, derivatives, copy trading, and asset management. In 2024, BingX proudly became Chelsea FC's principal partner. Now, where to start with the notable events of this quarter? The fourth Bitcoin halving, CZ sentenced to 4 months in prison, the return of Roaring Kitty. There were also multiple people charged by the US authorities, such as Abraham Eisenberg, who was convicted for the Mango Markets exploit, Samurai Wallet founders who were charged with money laundering, and the Prepare brothers who were arrested for MEV sandwich attacks. While some of this may be a net positive, others, like the conviction of the Samurai Wallet founders, could set a dangerous precedent for privacy-centric projects within crypto. Okay, now on to Bitcoin. Like total crypto market cap, Bitcoin oscillated within a range this quarter between 58 to 72K levels. The halving had no notable impact on price, and at the end of May, some downward pressure on price could be attributed to Mt. Gox starting to move its 140K Bitcoin stash. Just at the start of July, Germany started selling its 2 billion Bitcoin stash seized from criminal activities, and Mt. Gox started its repayments of roughly 9 billion worth of Bitcoin, though it's likely that the news of these events have caused more sell pressure than the events themselves. After the fourth halving, Bitcoin hash rate experienced its first quarterly decline in 2 years. However, it still managed to hit a new all-time high on April 23rd. A notable development in the industry is that mining companies have started to diversify, with many having expanded or are looking to expand into AI. Tether also made a big move in entering the Bitcoin mining scene, with a 500 million investment in different mining-related ventures almost being finished. Among its ventures include its 100 million purchase of BitDeer shares and various investments into mining facilities in Uruguay, Paraguay, and El Salvador. Ethereum outperformed Bitcoin this quarter, only falling by 6%, even though living through its price action in June might lead you to think otherwise. This is thanks to the approval of US spot ETH ETFs in late May, which led to a spike in ETH's price, which it later nearly round-tripped by the end of Q2, though the recent rally may just see it recoup these gains. Okay, moving on to Solana. While the Sol token has dropped by nearly 30%, its trading volume has actually held up better compared to Bitcoin and Ethereum. This is likely due to the continued activity on Solana, fueled by platforms like Pump.Fun, which make it extremely easy to launch and trade tokens. So despite price declining, meme coins and celeb tokens continue to multiply on the network. Total DeFi market cap has been on a downtrend since mid-March, despite getting some relief from the approval of spot ETH ETFs. Though DeFi token prices may have fallen some, there's actually been a slight increase in TVL in Q2. Ethereum, Tron, and Solana managed to hang on to their share of their market, while Ton managed to break into the top 10 chains by TVL. TVL on Ton grew from 204 million to 907 million in Q2, a 344% increase. Like most cryptos, the trading volume of NFTs has also dropped significantly by 32%, though still remains higher than it was for most of 2023. In comparison, Solana's activity has nearly matched Ethereum's, coming in just 17 million behind. Meanwhile, the new Runes fungible token standard for Bitcoin, which launched on the halving, failed to live up to the hype as yet. NFT trading volumes on Bitcoin have shrunk significantly from the spike seen in March and April. Well, there you have it, geckos. That's all we could fit in today's video. Which insight did you find most interesting? Let us know in the comments. We'll link the full report in the description, which you can read if you want a more detailed look at the state of Q2. Until the next one, bye.